If you can't do a top-down analysis from the weekly time frame to the 1 minute chart, you simply do not know how to trade. And I'm going to say it again, if you don't know how to do a proper top-down analysis on the chart, you simply do not know how to trade. Now, in this video, what you're going to learn from this video is how to top-down analysis a chart, what time frames you should be trading on, how to attack the market, how to dabble into different time frames, because some people want to be one time frame trader, but you need to be able to see the market on different time frames and make concrete decisions from the market. So in this video, you're going to go home with, at the end of this video, you're going to go home with learning how to do a proper top-down analysis on the chart and how to be able to play in between the higher time frames and the lower time frames and the higher time frames and everything in between. Now come on, let's get to work. So I'm going to be using a Euro USD chart, or let's use a GBP USD chart. Now we're going to be doing a proper GBP USD. Let's do a chart where I don't have any markups on. Good. So what is top-down analysis basically? So top-down analysis basically means your ability as a trader to be able to go from the higher time frames to the lower time frames. Basically explaining the word top-down. From the higher time frame to the lower time frame. So how many time frames do we have on the chart? We have the 1 second time frame, we have the 5 minutes time frame, all of that ranging all the way to the 12-month time frame. So that's basically the yearly time frame. So you don't need to use all of it. I don't use everything, but you should be able to play with at least 5, 6, 7 of this time frame, so you know how to handle the markets in different time frames. And the good thing about learning top-down analysis is the fact that you are able to provide clarity to yourself, because the market knows what it wants to do. You're able to provide clarity to yourself as a trader on how to attack the market, on how to mark up properly. So now let's get back to the topic for this video. So now back to top-down analysis. We have the monthly time frame here. We have the weekly time frame. So we're going from the monthly to the weekly to the daily to the 4-hour to the 1 hour to the 30 minutes to the 15 minutes to the 5 minutes. So basically explaining top down. So top to the bottom, top to the bottom. So now, why do we do top-down analysis? The top-down analysis is basically why we do it as a trader, is to be able to see the market for what it is telling us. If you see now, on this particular chart, this is the monthly time frame. You can see how few these candlesticks are. So from here, which is Wednesday, 01 July 2009, to current date, which is 2025, just look at this is all the candlesticks that we have here, because it's the monthly time frame. So for every of this candlestick here, for each of this candlestick, no matter how small it is, this takes a month for each of these to materialize. Now, if you go to the weekly time frame, that is lower than the monthly time frame. Each of these candlesticks here, from this to this, hold on, let's use this. From this to this to this and this and this, even this doji here, all of these are all takes 1 full week for each of these to materialize. So now, what do you think? Do you think market on the 5 minutes time frame, this is a question to you, market on the 5 minutes time frame, decisions being made here, look at how much these candlesticks are as compared to the weekly time frame. Which do you think has more backing? Which do you think the market will respect more? Which zones do you think the market will respect more? Obviously the weekly time frame, because basically it takes a whole week to build one of this candle. So imagine seeing, this is a Maribozu candle here. Imagine seeing this Maribozu candle on the weekly time frame on this particular double top here. Look at how much fall we have since this double top. So now you can't compare this Maribozu candlestick to the 5 minutes Maribozu candlestick, because come on, we have multiple maribozus, and you need to be able to even see the market for what it is to be able to know when to take action on any maribozu candle. Not all maribozu candles are maribozu candles. So back to top-down analysis. So now currently we're on the daily chart. The daily chart basically means for every of these candles you see here, this takes 1 day for each of these to process. So we have 1 day for all of the price actions between a whole day is just this candle. Just this candle. This candle takes 1 day, 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 and so on and so forth. If you come to the 4-hour chart, it takes a whole 4 hour for this candle to print, and same thing as the 1-hour chart, the 30 minutes chart, the 15 minutes chart, and the 5 minutes chart. So for every candle on the 5 minutes chart, it takes 5 minutes for this candle to print out. So basically, the higher the time frame you go, the more reliable the information you are dealing with. The higher the time frame, the weekly time frame have more information that is reliable as compared to the daily time frame. The daily time frame has more information reliable as compared to the 4-hour time frame. The 4-hour time frame have more reliable decisions, more reliable information as compared to the 1-hour time frame, and so on and so forth. But that doesn't mean these time frames are not to be used. These time frames are for entry. The 15 minutes time frame, the 5 minutes time frame, and 30 minutes time frame are for entries. But your markups should be coming from the weekly time frame, the daily time frame, and the 4-hour time frame. So now just imagine, let's say I want to mark up this chart currently. This is the current date, 29 September 2025. If I want to mark up this chart now, I just come to the monthly time frame, turn this on, look at just to have an overview of what is going on, because it takes a whole month for a candlestick to print on the monthly time frame, so we can't be waiting for a whole month to make decisions on the market. So you just come, see what you need to see the direction of the market, then come on the weekly time frame. So on the weekly time frame currently, what do I see here? I can see we have this area being respected. So now this is a support, this is a resistance zone. So I can also see that we have this area here being respected. So this is the support zone on the weekly time frame. So if I take this back to the candlestick, you can see how price has respected this zone. Price has bounced off here. Price has bounced off here, and price has also made double tops on this particular area. This is the weekly resistance area, and you can see how we are coming down from the monthly to the weekly. If we go to the daily time frame now, you can see more candles, but still respecting what the weekly time frame says. That's basically how to top-down analysis. So if you go to the resistance level here, you can see it is still being respected. It's being respected here, it's being respected here, and it's being respected here. So if you come to the 4-hour chart, the same thing being respected here. Let's use this. Price is respecting here. Price is respecting here. Price is respecting here. Here. And so on and so forth. You can go all the way to the back. You see price respecting each and every of this area. So now, on the 4-hour time frame, as a swing trader that I am, I can take action on the 4-hour time frame. But when I want to take action on this particular price here, let's say I want to take action here, you can see as price got to this particular level, I'm looking for sales, because price has broken above this area, but there's no confirmation that price is going to go above it consistently. So as price broke below this area here, let's just move this to the side. After this particular close, this close here, I'm talking about this candle. After this close here, we can come down to the 1-hour time frame. Let's go find that candle. You can see there's more information here. So the higher time frame creates more clarity, the lower time frame creates precision. Remember this: the higher time frame, higher the time frame, higher the time frame, the more precise, the more clarity you have. The lower time frame, create opportunity to make precise decisions. This is when we're talking about sniper entries. So you can screenshot this and do whatever you want to do. Write it on your notes so you can know how to, make informed decision moving forward. So the higher the time frame, the more clarity you have. The lower the time frame, it creates best opportunity for you to make precise decision. So if you see here, I don't want this video to be very long, but I need you to be able to take the things you need to take from it. So remember, on the 4-hour time frame, we have a Maribozu print down. This is a Maribozu candle. If you don't know what a Maribozu candle is, you need to go on study from maybe Baby Pips or check some of the videos I've done about identifying candlesticks. So this is a Maribozu candlestick printing back into the zone. There's a zone here. There's a zone on this particular level here. A zone here and a zone here. So a Maribozu candle printing all the way to the bottom. So we have a Maribozu come to a 1-hour time frame. In between that Maribozu, we have this is a Maribozu. So we have multiple candles in this area. So you can come down to the smaller time frame, go to the 15 minutes chart. See, the lower the time frame, the more noise you get. So that's why you need the higher time frame for more clarity than the smaller time frame for precise entries. So now come on here. You can see this one, the Maribozu on the 4-hour time frame is what is represented here as so many candles. So imagine you want to get in for a sell position. You can sell around here. You can sell around here. Let's say you sell around here, as you set a sell stop around here. Your stop loss right above this. So you have a smaller stop loss, then you're able to catch a bigger move. So you can see how we're able to bring it down from the weekly time frame to the daily time frame to the 4-hour time frame to the 1-hour time frame down to the 15 minutes time frame for entries. So it's the same thing that happens in every other chart. If I go to let's clear this up. If I go to a random chart, let's say I do USD CHF, USD Shefi, and I use the Ohanda market. Oh, okay, I have markups here. Okay, look at the markups I have. No, let me use a fresh one so we can do it from the start. So USD Shefi. So here's the Swiss francs. Let's clear everything. Move all the joins. The monthly time frame, you may not really need it, but you can just go on the monthly time frame to see. So if you go on the monthly time frame here, you can see, look at so many noise here. What is this telling you? It is giving you clarity. It is telling you the market is a seller's market. It is telling you there's resistance here. That is what it's telling you. So you mark up, draw your zones around this level. Make sure your zones capture the points, the bend, the turning point of the market. So this particular point here shows you this is a closing price that buyers and sellers have agreed on the monthly time frame. So if you come to the weekly time frame, you can see how it is being represented here much more clearly. So we have a level here on the weekly time frame. You can see there's another level here because it is sitting really pretty. Now let's focus on this level. So on this level here, if you go on the candlestick charts, you can see how price respected here, respected here, respected here, and here 4 times on a weekly time frame. If you go on the daily time frame, you can see how this is basically top-down analysis at its best. So the lower the time frame we go, the more information we are getting, the more noise we have, the more candlesticks we have. So that's why the higher time frame, you need the higher time frame to be able to see price for what it is, for more clarity. If you come to the smaller time frame, you'll be able to make more precise decision. So you can see so many candles here on the daily time frame, so many candles here on the daily time frame, but it's still respecting the weekly zones. If you come to the 4-hour chart, You can see our price is respecting these zones here, here, and here. So they're coming from the top to the bottom. So weekly, daily, 4 hour. We go to the 1 hour chart, the same thing. So this is enough noise. Let's just cut it so we can have something to work with. If we cut price here, so we can deal with these particular areas here. So you can see so many noise. So now let's say we are looking for an entry. We have this markup down already on the 4 hour chart. Let's say we are looking for entries to sell. So now let's say as price broke around this. Okay, this is 6 o'clock candle. This is London session. So let's put this here. This particular candle is a London session candle. After this close, rejecting this particular zone, the close below the zone, you come to the 1 hour chart. You can see what is being depicted here. This is that Mariposa candle that closed. You can now come to the 15 minutes chart. See, the lower the time frame, the more noise you get, the more precise you are to make more informed decision. But the higher the time frame, the more clarity you have. So bring it from the higher time frame to the lower time frame to make your decision. So as you come to the smaller time frame, this is the Mariposa that closed. So you look for something that you need to see on the smaller time frame to make decisions on. So we can see a sitting pretty double top formation here. Even if you go on the remember to always use your line chart. So if you go on the line chart, you can see it's even 3 hits to the top on this particular level. So you can quickly come to this level, find areas to sell from. This is 1 p.m. New York session. The stop loss above here. Remember, this is the Mariposa candle on the higher time frame. Now you see the Mariposa candle. It's telling you price is looking to go down. You come to the smaller time frame, the 15 minutes candle, from the 15 minutes time frame or the 1 hour time frame. You look for precise entries and you short the market. Simple and easy as that, but not so easy. So you need to go and practice and practice and practice to be able to see this thing the way I am seeing it. Because I'm seeing this because I've been here a long time and I'm able to see them without even going on the line chart or whatever. I can just see what I need to see to make decisions in the market. That's simply it with top-down analysis. I wanted this video to be fast, to be quick, so you can capture the information you need to capture as quick as possible without any flutters. So if you want to learn stuff like this, don't forget to like, comment, share, and subscribe to the channel as we build a community together. And I'll see you guys in the next video. If you have any questions, don't forget to drop it on the chat box or in the comment section. I'll be there to answer the questions and provide as much clarity as possible. I'll see you guys in the next video. Bye for now.